Hello, everyone. Welcome to FOW Japan. I'm Mathieu of Global Investor Group. Further to the keynote speech and fireside chat earlier, we are now moving on to the panel discussion on ESG integration to explore the development and concerns of incorporating ESG factors into investment, particularly in Japan. So moderating the panel, I'm delighted to welcome Russell Beattie, our EXCO board member and vice president of FOW Japan. Russell has 27 years of experience in listed exchange-traded derivative in Asia Pacific. Currently, he is also the executive director, APAC listed index derivative product specialist for MSCI, based in Hong Kong. He has lived, worked, and been a licensed representative in Hong Kong, Singapore, Japan, and Australia. To discuss this hot topic, Russell is joined by our distinguished panelists from DWS, Eastspring Investments, and Eurex. So today we are not only to hear from our speakers, but also like to hear from you. So we encourage you to ask questions throughout the session via the Q&A function on your screen. Please note that every session is being recorded and will be available on demand. Okay, so now I'd like to hand over to Russell to get started. Russell, over to you.
Thanks, Joy, and thanks everyone for taking the opportunity to join us this afternoon. I think ESG is an incredibly important topic for us all, ESG/climate, and I think we're at the very beginning stages of how it's going to evolve in the derivative and also the broader ecosystem that we have. So it's a great opportunity to catch up with these market experts today. So Priscilla, if I can start with you, if it may kick us off, what really does motivate corporations and institutions to adopt more rigorous ESG tracking and reporting?
So what we're seeing is that it has great relevance in terms of risks and attention to the metrics associated with tracking would really give visibility to management and the board on the risk factors associated with whether it's environment, whether it's social, and also give visibility on governance. So this is what's driving the corporations to now focus on this. And there is definitely correlation in terms of financial performance, risk factors, as well as stability and viability of the business models.
So it's interesting that it's really being adopted at the highest level of corporate boards, as you say, isn't it? You know, like it's part of the ingrained DNA going forward for most companies as they go through. Is that a fair assessment?
Yes, definitely. And very much of that is really driven by shareholders, as we know that many shareholders, stakeholders, if you will, are very focused on what is the company doing in terms of really getting visibility and giving themselves the feedback necessary to continue to improve and also be able to track how they're actually moving more progressively in a direction that would reduce the risk and improve the metrics.
Thank you. And Sam, specifically for you and focusing on Japan, I mean, what are some of the highlights, you know, in regard to the challenges in ESG investing in Japan, and how do you cope with those from your investment strategy?
Hi, Russell. Yes, first of all, I think is the biggest challenges that we've seen comes from data and disclosure. This is one of the biggest challenges as yet. I know that quite a good number of Japanese companies have made ESG disclosures annually. However, there are still many companies, including mostly mid-sized and small companies, that haven't disclosed at all. And on top of that, for those who disclose, especially even like large corporate, the information they disclose is not all relevant at all. So there's the quality of information there, the quality of data is there, and the reliability of the data as well. You know, for fundamental investor like us, each industry has its own ESG risks and opportunities. And from bottom-up level, each companies within this industry has their own risk profiles too. So by having the data bottom up, you will have the investors in the market a lot in terms of how to assess the risk profiles of the companies in ESGs. In addition, with still about the data, what we can see is that there is a lack of standardized and mandatory ESG reporting systems globally, and in Japan, with the exception of Europe, where they are way ahead in terms of putting up with the EU's taxonomies recently. For Japan, we see the lack of the framework, the reporting framework that have impact on the quality of the data and disclosure by the companies themselves. That's why we can see that even like the same industry in the companies they disclose differently. They disclose different amount of the information, which also make it a big challenge for investors in order to understand and to assess. And last but not least, I think the important issues of third-party ESG data research providers, where investors and the user information actually see conflicting assessments, conflicting scorings, different scorings, and different assessment in terms of how risky of ESG risks companies may face. So that also added to the challenge as well. So in order for us to cope with that, I think doing thorough due diligence, doing thorough homework for us is to engage and obtain information directly from the companies is one of the way for us to solve this. Some companies actually, they do have data, but they don't disclose it, or they don't report it, or they don't know how to do it. So by doing our fundamental analysis and getting direct information from the companies, that also helps us as well, combined with information from other sources that we can source, even including from the third-party ESG data research providers.
Look, it's interesting you say that, because we've seen it in not just in ESG, but in other markets across Asia Pac. We've got such a diversified, geographically, culturally diverse marketplace that it's often very difficult to get a uniform policy across the board in which we can set at. And to your point, you have to go do the bottom-up analysis yourself to ensure that the standards are being met. And so if I'm hearing you correctly, it sounds like that from a regulatory perspective or an industry association perspective, it's about investing in that standardization of policy so we know what the best policy is and it can be implemented uniformly across the Japan market. I mean, is that fair?
That's correct, Russell.
Yeah.
I think, and the regulator, I think they should talk to themselves and discuss among themselves to come up with the common framework that can apply across geographically or across the region.
Thanks for that. That's really very interesting. And Mathieu, specifically, I'd love to get your thoughts because you're based in Japan. How do you see the ESG landscape evolving this year, given the terrible challenges we've had with COVID and other things this year?
I think I would just like to take a quick step back and saying that the Japanese company have performed some sort of ESG or some form of ESG for quite a while, for the past, I would say, 10 years. And I would describe that in calling the CSR, corporate social responsibilities, as we were doing back in today. We're not obviously calling that ESG, but essentially that's pretty much what it is. Now, ESG in the form and the way we call it, and we like to call it today, the one who have obviously kicked off that industry was JPIF's Government Pension Fund in Japan, right? I'm sure you're very well aware of that. As of today, they've got 7 funds, some of them using MSCI benchmark, some of them using FTSE, and I think they've got S&P and Morningstar as well, for a combined sort of asset of about $93 billion, something around there. So quite a big amount of money, right, that are committed into the space. And that goes back to Sam's point, basically, when he was saying that there is a lack of disclosure. And there's been always the narrative that JPI had along the line to push for more disclosure, to push for more framework. And I understand that there is more to do over there, but I think that was, I think they clearly understood that. even 2 or 3 years ago, and they still keep on pushing for it, so that, you know, the quality of data and quality of report is finally happening. Now, when you look at what has been happening this year, and it's quite an interesting development, JPIF has been supported by 2 other government agencies. The first one being the GFSA, the regulator here in Japan, who have published 2 papers early on this year to provide guidance on how to do ESG. So I appreciate that can be a long debate and saying, yes, it's not enough, but I think it's a right step in the right direction, as they've identified the problem at least, and they are working onto it. And the second part of it would be the BOJ, who is also touching the banks. So what is the BOJ doing is there is an ongoing project over there to basically include climate change as part of the stress test it requires from the Japanese bank. Right, so there is really that support from the institution in Japan who was trying to really push for more ESG integration, and that has obviously affected the private sector. When we look particularly with the ETF issuer in Japan here, we have listed several ESG ETF on the Tokyo Stock Exchange. I have 2 examples here, but it's just purely example. Sort of rather well-known 1498 from Asset Management One and 2643 from Nomura was as a code. So if you type that on Bloomberg, you wouldn't see get the ETF. Nomura has been launched as of July, was the latest being launched, all on Japanese equity, all on ESG. So it starts to happen. In addition to that, what the Japanese investors have done, or should I say the foreign investors investing in Japanese equity, we have seen also competing ETF, not necessarily listed on TSC, listed whether it is in Europe or in the US, but on Japanese equity as well. So these kind of developments start to appear too. And last but not least, looking at the bank, who have been heavily investing in green bonds since 2017-ish, 20, even 18, particularly those collateral from the World Bank, the IBRD, I believe it's called, and collateral green bond from the World Bank. So pretty active actually, and quite interesting recent development that happened this year.
You touched on a very key point, and I think it's, you know, I'm a futures background. I'm a futures guy. So, you know, and when I talk to people about, you know, ESG launching a futures contract in isolation is not necessarily going to be the most success. It's about the ecosystem, isn't it? And I think that's exactly what you're touching on, isn't it? It's the fact that you may have an index, but you then have to launch the ETF. You have to have a cash market against it. You have to have futures contracts against it. You have to have investors like Sam and Priscilla who are looking at bottom up for the companies that make up that index. Do you know what I mean? Like, so we're talking the whole ecosystem, aren't we, really, as we move forward? It's not just derivatives or one particular product. It's cross asset. And are you seeing that, like, across the asset classes?
Yes, you're very right there, right? Whether it is equity or fixed income, we see things happening, whether it is Japanese-based asset managers or foreign asset managers, for example, like Sam is focusing on Japanese equity. So you really need that entire ecosystem, right? So it's not just about derivative, it's not just about the cash market, it's not about equity, it's not about bonds. You really need the entire industry to move all together.
No, that's great. And Priscilla, I mean, I know you are coming from California and it's 1 o'clock in the morning, so gold star for you for joining us today.
Oh, I work 8 hours. No
problem. Do you? Oh, there you go. You're used to it. Good for you. So, you know, maybe from your insight, you know, looking in, if you like, so some of the challenges that you may see specific to Japan in implementing these policies as opposed to, say, a US or a mere corporation might have.
Mm-hmm. So what I find is that with ESG, there are so many parameters and so many descriptive, I would say, requirements that it's very difficult for all the different companies in various different countries to understand how to actually be measuring and calibrating themselves against some standard that then can be compared. So I've always said that in terms of the companies we invest in and in terms of the asset management that activities that we do with our companies and assessing and reviewing, we boil it down to very simple metrics to start. And I think if we make progress on those very simple, measurable, quantifiable metrics, we're making great progress. So what are they? Well, it is the amount of energy consumed or used, and this is electricity, fossil fuel, energy that's consumed and used for the revenue that's generated or for the profit that's generated. So that's a unitized quantification of energy that is fossil fuel CO2 emission related. So that's very measurable and can be very easily validated and verified. Secondly is the amount of natural resources. So what's the easy natural resources? It's water consumption. And that's an easy one. Now, other industry might be in terms of minerals and in terms of metals and so on. But it's the amount of natural resources consumed to produce the revenue or profit. And then the amount of waste, if you will, associated with that environmental resource. So if you're consuming a lot of water and you're wasting a lot of water, that's another metric. And then thirdly is waste. How much waste is produced for the revenue produced? And then what do you do with the waste? Do you recycle? Do you reuse? Do you incinerate? How do you actually treat it? So these are very measurable, quantifiable numbers. So then what about S? For a company, in terms of looking at S, you should look at in terms of wage discrepancy for gender, race, and age. And so within the company. Then when you look outside in terms of the impact of your product or service that you do, you look from the S viewpoint in terms of how you are impacting in the society or community in terms of their standard of living, which is wage related, and how you are improving their standard in terms of their quality of life. So keep it simple, make it easy to measure, and it's the same numbers whether you're in Japan, China, US, or Europe. Everybody can understand those numbers.
So just going back to a point that Sam made, if I can, Priscilla, and direct it to you. I mean, it's quantifiable, it's measurable, but can you actually, are they willing to disclose it? I mean, how deep do you have to dig? How deep do you have to dig to get there?
Right. So what I have found being bi-coastal, meaning two sides of the world, to both the US and also in Asia, China, I find that it is definitely the case that culturally, the Asia culture is more reserved. And so people tend not to be as open, not that they're not transparent, but they're not as open in communicating and really providing the information, because there is a level of uncertainty, there's a level of insecurity with respect to the information that's provided. Whereas the Western culture is more progressive disclosure for improvement, and there isn't the concern about the disclosure that might end up being punitive. And that's something that's very important, which is that we have to get away from the view that any disclosure would have consequence of punitive impact. We should look at it as a self-corrective metric for you to improve comparing to yourself, not necessarily as a way to actually be used as a stick, but rather a way for you to gauge whether or not you're making improvement. And if we can have that mindset, then I think it will be easier for the Asian culture to adopt, which is that you are trying to improve your company, improve your standing on various metrics that are measurable. And it's not intended, and at the board level, it's critically important to have a mindset and culture to say that this is not intended to be punitive, but to be reducing the risk and therefore improving the performance overall for the company as a whole.
Excellent. Yeah, that makes sense. And it's equally going to be a challenge for us, as we alluded to earlier, going across that cultural divide, isn't it? It's particularly, as I mentioned, even in Asia, we've got so many diversified areas to be able to reach those targets, let alone looking at it globally. So Sam, you know, like, okay, we've explored it. ESG, it's here. It's going to be, you know, it's part of what we're doing going forward. But you know, a lot of comments when I speak to people who aren't close to it, the first thing is does it really create value for investors? I mean, is this really, I don't want to use the term greenwashing, but is there real significant value here? I mean, what's your thoughts on that?
Sure, Russell. The short answer is yes. I believe it is a yes. So the thing here is that for us fundamental investors like us, ESG integration and engagements are central to our process. So it cannot be disintegrated part of the process at all. So the thing is that if you recall any fundamental investment textbook, in the SWOT analysis, I see all the ESG issues located in there, in the SWOT analysis table. It could be either risk, it could be threat, it could be opportunity as well. And for some companies, they have strengths in there, or for the other companies, they have weakness in there. So as part of the fundamental analysis of a companies and the business models, in order to do the thorough due diligence on it, these are the factors that we have to analyze, and we have to assess whether those ESG issues can have material impact on the sustainable long-term earnings of a company. And from there, we can have a view on what the company is really worth, or what are the range of the values of the company worth in the futures, considering like all the changes and all the risks that can have impact in the long runs, which mostly come from ESG world. So I can't see any different from their scenarios.
I like your analogy about ESG can be in all four quadrants of your SWOT. You can be a strength, it can be a weakness, it's opportunity, it's basically everything. You're right. I mean, everyone has to look at their own individual business model, don't they? All right, and see where they can pan out. So look, that makes total sense. Again, obviously, I'm a futures. I'm coming from a futures angle and FOW Japan. I mean, Mathieu, you know, looking at derivatives, and I'm not just going to focus on futures here, but you know, it could be OTC derivatives or anything. I mean, what are the use? You know, what are the compelling cases, if you like, for investment and hedging tools in regard to supporting the growth in ESG?
Very good question. I think the derivative in general offer two things. The first thing is choice and standards, and the second thing is liquidity. So when I mean choice and standard, we discussed that there was many ways to do ESG, right? And I think that's what is a strength of the ESG space, that you can do it however you want to do it. So you can create different strategies and bring, you know, different solutions to the market and different color as well, right? When I look at our offering, I think we also have the same point right here, where we have about 22 futures and options at the moment listed from two different index provider, which is basically yourself and stocks, the other one. We have listed as well a fixed income ESG futures as of this week. So, you know, that point of choice is right there. Choice is also methodology wise, right? Going from screen methodology to positive screening methodology, going by leaders as well, and integration. That the whole palette of choice that you may have, that adds basically value for the investors. Choice is also geographical, right? We are a European background here, but we have the contract on the US and on Asian underlying as well. We have MSCI Japan with some trades on it. We have MSCI EM Asia. We had a big trade on the EM Asia this week, last week, 250 million that went through, by the way. So it means, there is some very strong interest into that. And in terms of standard, I think what we always try to do as an exchange and a marketplace is really to bring people together, to pull liquidity together, to bring, that ecosystem all together at one stage. And that's bringing back to the next point, which is basically liquidity. And liquidity, you can measure it in different ways. You can measure it in the open interest. And open interest, as an example, we have about 5 billion now across products. You can measure it at the futures versus options. We have one particular very liquid couple, which is called Stocks Europe 600, the futures and the options. On the futures, we have 2.5. On the option, we have 1.5 billion euro as open interest. So very liquid type of underlyings. We also have a decent amount of open interest on the MSCI lineup. On the USA and EM Asia, we have 250 million. On the EM, we have 150. So that's what is about the open interest. Now, looking at the order book, which is the other metrics you may have in mind, when you talk about derivatives, is how much can you trade in the order book? How much can you hedge yourself without necessarily moving the market? And here we can offer liquidities up to about 20 million in one of our most liquid contracts, so 20 million euro either side of the touch, which is quite interesting because in this particular contract, we have more liquidity on the ESG version of the index compared to the non-ESG version of the index. There's quite an interesting development that we are currently seeing here, with 5 liquidity providers supporting the quotes. But even in the newly listed contract that we have, such as MSCI Enhanced that we have launched in May the 31st of this year, we still have a 5 million quoted in the order book. So there is this kind of ability for client to trade in our product. And the last point I would like to make in terms of use cases, I think often the case people think about futures, people think about derivative as a hedging tool, a cash management tool, and it would be very right to think so, right? But there is one extra point that is being made for some investors, particularly in the option market, where some clients have analyzed the volatility of the ESG versus the non-ESG version of that index, and realized actually that it's cheaper in some cases to trade the ESG version of the index because the ESG is actually a little bit leaner and your VIA is cheaper, so to speak.
Interesting. So is it safe to say, as you go through the life cycle, it's more focused around, I'm going to say OTC block trading at this particular stage? So a client or investor, say like Sam or Priscilla will ring up on their dealing team. They will seek liquidity through some sort of intermediary broker system and block it like that. Is that the way it's going at this stage? Or do you think that some of your contracts now are liquid enough to actively trading electronically on screen? I mean, what sort of life cycle are we looking at the moment?
So if you have had that question, let's say December last year, would have been right. A lot of it would have been OTC. Now we have seen a switch in this year that the order book has become so liquid that clients are actually trading that contract for what it is. And it's not just a quarter to quarter type of rolling type of contract. We do have things happening in the book. We do have trading and activity happening in the book in non-rolling month. And that is very good to see, because that means the product has reached a maturation, a level, a certain level of maturation, right, in this life cycle. So we do see those kind of activity happening. Yes.
It's that, you're right. It's that liquidity, it's that level of maturity that reflects the growing ecosystem. I use that word, I don't use that word lightly, because it's the ETF market, the cash market, the end investors, the futures contract. As you start seeing the futures contract become more liquid, it's a sign of the maturity of the market segment, isn't it, really, as it goes through? And it's all incredibly interlinked. So that's interesting that just this year, despite the challenges we've had, you've seen an increase of liquidity coming in and people being able to trade it as it is. So that's a telling sign that it's here to stay for a while, isn't it? No, it's great.
Very much right.
Yeah. Sam, again, if I could just come back to you, if I may. You mentioned earlier around companies and boards, and I want to specifically focus on Japan if I can, all right, about your engagement. I mean, what is the level of commitment of the Japanese boards and companies that you've been involved in your bottoms-up analysis and their commitment to the ESG goals? Do you think it's, are they seeing meaningful attention and focus on what they're doing? I mean, what's your level of engagement at the board level?
Well, before I answer your questions, I just gave you an example. You've seen on the news last year at the annual general shareholders meetings of Mizuho Financial Group. There was a proposal for revising the corporate charter to include sustainability policy and target. And even though it was voted down, but the interesting thing was that it received about 35% yes vote from the shareholders, which more than 1/3 of the shareholders actually agree to that. Why? I'm not the right person to comment on the merit of that act, but to me, it does signal some change in its shareholders' views or stance in terms of the setting commitments of the board or the management towards sustainability policy or goals. So for us, we use engagement with management and the board quite regularly, and actually quite a main tools for us in order to really exchange our ideas or to raise our concern in terms of the ESG's risks and even the opportunities with the company management and board. Even we raise our advice in terms of how the board can set out the policy towards sustainability. And actually it's quite a regular dialogue, and it is part of the investment process that we have to do. The approach and the response from companies vary from one to another. Some are very receptive, some a little bit skeptical, but above all, I believe from the experience and from the outcomes that we've done so far, we believe that patience and time is required when we need to engage company and engage the board in order to effect changes toward sustainability or toward ESG's policy and target. And by doing that, we also continue to engage to monitor the progress. And if any deviation from the progress, any explanation need to be sought from the management and the board as well.
Interesting. So the key point there for me is that you're seeing a growing shareholder demand drifting up to the board. So shareholders are holding the board accountable for implementation of these policies potentially going forward, and they're demanding that. So that's a really interesting thing as you start, because again, that's going to keep boards accountable and keep them focused as they go through, as they maintain these targets. It's very interesting. Something I mentioned earlier, just very briefly, and Priscilla, I just want to get your thoughts on it. There's a lot of people out there that think that greenwashing, that's getting used. I mean, there were some news articles out literally last week, wasn't there, right, around a bit of noise around companies and things in the US specifically with greenwashing. Is that on your radar? I mean, do you look at it through a lens to make sure from your investment policy? I mean, what's your thoughts?
So I think this is why I say that it's important to have very measurable, quantifiable metrics and make that the KPIs for the company at the board level. Yeah. And so I always say you have to measure, monitor, and manage. If you can't measure it, you can't monitor it, and you can't manage it. Absolutely. So those are very key. And one of the things that you will find, going back to why are people focusing on ESG and why are investors, shareholders focus on it, and why are they holding the board accountable? Was because not only does it really reflect risk, and there's a tremendous correlation with risk, but it's also very telling on the efficiency of the company. So for example, if you're measuring the amount of energy consumed per revenue produced, and you find that there is no improvement over time, that's telling, when in fact there should be, because you can see that energy usage should be improving, or resource usage should be improving, as well as waste treatment or waste produced should be improving. You can then compare, without going to specific on the corporations we work with, but what we're finding is as the corporation look at their supply chain, and they look at the amount of energy consumed for the revenue produced, and they see that for the same amount of produce or products that are being produced year over year, the energy is increasing, or the cost of energy is increasing. They then can ask the right question: why is this the case? Why isn't it for the same amount of products, for the same amount of revenue produced, why is the cost increasing? A lot of these metrics really can tell a lot about the efficiency. And this is why the board needs to pay attention, because not only does it give you the metrics to hold accountable on risk analysis, but also efficiency.
Yeah, no, great answer. And it's interesting because I think as an industry, we're going to be held accountable to it really as we go through, as more and more money becomes involved and there's more investing into it. So it's definitely something that, as you say, measurable and actionable items that you can go through. So Mathieu, we've spoken about ESG, okay? We haven't really mentioned carbon, or really even climate. Is that the next best thing? Is that the next thing on the horizon for us?
So carbon in Asia started with having China as a green bond, where they started to emit a lot of green bond a couple of years ago, right? And it used to be one stage where carbon was China, Australia. And I think it has spread out significantly since then, to the point that we have climate and carbon discussion in literally every single ESG meeting that we have nowadays. So it has really reached that big level, right? And you can see that there is many initiatives at the moment going on in carbon, right? Not just in Japan, but we look at Singapore with the emission exchange, which is being planned. Similar things in Hong Kong. You look at where the buy side is structured in Australia with a lot of screening criteria on the carbons, right? Looking at Japan specifically, I mean, JPIF have always been one of the big actors here, right? And two of their big funds that they have invested in the past few years have been low carbon funds. One specifically on Japanese equity and one being on World ex-Japan type of equity. So it's also really, a big trend that's currently happening in Japan right here. Maybe a little bit more on how we can do carbon or low carbon investment, should I speak, right? And there is several ways to do that. We talked about the green bonds, and the typical example here is project finance on, let's say, solar panel. You give your money away to build up solar panel. That's very straightforward. Second way would be to trade the carbon emissions, which is actually there's a cash market for that, primary, secondary cash market. There's also a derivative market that one of our sister company, Eurex, is doing. So that is also an actual product that investor can trade. And then there's the financial side of it. And financial side, you can even split it even more. There's thematic that you may have. There are things like low carbon indices where you're going to use the Z carbon score of companies to reshuffle the weights out of your index, right? And there is the latest edition or latest innovation, so to speak, which are MSCI enhanced carbon focus, which have been rather successful as well, which is positive screening type of strategy here. And again, to reduce the aim is to reduce the carbon footprint. And for all those products, I believe there is demand from clients. There's definitely a strong interest, particularly as well from Asia. So yes, we are very bullish on carbon. And I think I would summarize it this way, that carbon would be sort of its own asset class, so to speak, in the sustainable space.
Yeah, no, you're right. It's its own asset class. You're spot on, like as you look at it and address it. Priscilla, we're just coming up the top of the hour. So I just want to give this last question to you if I can. And it's really around how do you increase the visibility of the impact of ESG in valuing investments? Now, that's probably a 40-minute session in itself. But have you got any initial thoughts around that visibility? Because I know you've mentioned it a couple of times around being accountable and holding people accountable to their goals.
Right. So I have been really working hard to get the big four, if you will, focusing on really having some leadership here to associate financial report and financial accounting and verification to not only look at the numbers for financial, but also the KPIs associated with ESG. And I think that should be part and parcel of the annual quarterly report, and there should be very specific metrics on the amount of resource consumption for the revenue and for the profit that's produced, and then also the waste that is either recycled or incinerated and landfilled, if you will, for the revenue and profit that is produced. Because if that is visibly associated with the financial numbers, which is the revenue and profit, and really quantized against the revenue and profit, then you can really tell the value of the revenue and profit. How much did it cost to create that revenue? How much did it cost the environment? How much did it cost the climate to create that profit? And you will find that both shareholders and consumers are going to react very differently comparing one company to another in terms of what did it take to create that revenue and profit. And a company that is more responsible, accountable, and sustainable will be viewed differently because there's lower risk, higher efficiency, and better use of resources.
Thank you, Priscilla. As I said, we could spend a lot of time sort of digging a little bit more deeper into that, and 40 minutes went very, very quickly. So just in closing, what was interesting, I was very lucky today to be on a call with CFTC Commissioner Kevin Webb, and he said climate and ESG is here to stay. So regulators all around the world are going to be focusing on this, and this is a topic which ultimately is going to be part of our everyday lives, I believe, over the years to come. So very timely, and very greatly appreciate your time and efforts today. So thank you very much. Joy, if I can hand it back to you.
Yeah, sure. Yeah, thank you very much for the panel, and for Russell for moderating this panel. It's very insightful and informative. I wish you could have a longer time for you. I'd like to thank Priscilla for joining us from US despite of the time difference. Thank you, Priscilla. Sam, Mathieu, for sharing the latest trends of ESG investing and ESG derivative landscape in Japan. Also, thank you for the delegates for participating. I hope you enjoyed this session and found it very informative. So next, in a few minutes' time, we will have Olga Roman, Head of Research of ISTA, to give a presentation on development of ESG-related derivative to further explain, examining the role of derivative can play to support a sustainable investment. So thereafter, we will reconvene at 5:30 p.m. Japan time, 4:30 p.m. Singapore and Hong Kong time for the panel discussion on trading technology advancement. So stay online, and thank you again for the panel. Hope to see you soon.
Thank you.